Hello everyone. Are you ready to begin our adventure to all around the world? Let us begin. We first welcome you to New York City. Throughout this journey I'll learn about the audit-related services. But before we go further, let us understand the meaning of audit-related services. In addition to the traditional financial statement audit, most organizations experience needs for independent, objective assurance on financial information, transactions and processes. Auditor may offers a range of audit-related services such as completion audits, reports on internal controls, review report, agreed-upon procedures, compliance audit, and audit of prospective financial information. Audit firms are often asked to provide services to clients in which do not involve the expression of an opinion on the truth and fairness of the financial statements. For example, the firm might be asked to give assurance that interim financial statements are correctly prepared in a business, or they might be asked to prepare the financial statements for a private entity audit client. Now, let us look at the auditor's report to audit special circumstances for special purpose audit. The auditor should review and assess the conclusions drawn from the auditee. Evidence obtained during the special purpose audit engagement is the basis for an expression of opinion. The report should contain a clear written expression of opinion. In an audit of special purpose financial statements, the auditor shall obtain an understanding of consideration when accepting the engagement whereby the auditor determine the acceptability of the financial reporting framework applied in the preparation of the financial statements. Next, considerations when planning and performing the audit. Auditor shall obtain an understanding of any significant interpretation would have produced a material difference in the information presented in the financial statements. Then, forming an opinion and reporting considerations. Auditor shall evaluate whether the financial statements adequately describe any significant interpretations of the contract on which the financial statements are based. Example of special purpose audit are a tax basis of accounting for a set of financial statements that accompany an entity's tax return, the cash receipts and disbursements basis of accounting for cash flow information that an entity may be requested to prepare for creditors, the financial reporting provisions established by a regulator to meet the requirements of that regulator, and the financial reporting provisions of a contract, such as a bond indenture, a loan agreement, or a project grant. The main reason for special purpose audit is to provide assurance to shareholders and other members regarding the reliability and accuracy of a company's annual financial statements. Hello everybody. For our tour in London today, we will be visiting on assurance level for related service. It is divided into two types of service, which are assurance service and non-assurance service. The purpose of assurance services is to make improvement on the quality of information for users to make a decision making. Meanwhile, for non-assurance service, it is to provide recommendation of services to management in carrying out duties. Assurance service that is provided by auditor is called attestation service. Attestation service is a service in which the auditor express a conclusion on the reliability of the client's financial statement. There are four categories of attestation services. The first category is audit of historical financial statements. In this category, the auditor issues a written report to express his opinion on financial statements, whether it is in a true and fair view as well as in accordance with standards. Second category is effectiveness of internal control. THI's category provides forward-looking information because effective internal control reduces the likelihood of future misstatement in financial statements. Third category is the review of historical financial information. This category only provides moderate level of assurance on financial statement, which means that less accumulation of evidence in supporting opinion. The last category is other attestation services. This category is the extension of the first category, as users seek for independent assurance on other types of information. Bonjour everyone. Welcome to France. Well, now let's look into due diligence audit for our in France today. Due diligence can be defined as an investigation, AUD, or examination of a particular business or individual prior to signing a contract, or also defined as an act with a certain standard of care. This type of audit is carried out in order to enhance the amount and quality of the information available for the decision makers. Next is the procedures in due diligence audit. The procedures in due diligence audit include 11 procedures which are: 1. Reviewing the working papers that has already been produced by the previous auditors. 2. Evaluating the valuation of the company's assets. 3. Reviewing the company's statement of profit or loss to determine the accuracy of its profit. 4. Carrying out an analytical review and discussing any unusual items. 5. Reviewing the interim figures in order to evaluate the accuracy of the forecasted figures and looking into the possible achievements of the forecasted figures. 6. Assessing the business trends by using interim and management accounting. 7. Verifying material items in the statement of financial position. 8. Reviewing and report on the management structure and also corporate structure. 9. Reviewing litigation issues, contingent liabilities and commitments. 10. Inquiring the company on whether it is facing any problem relating to the product or etc. and 11. Reviewing the statutory records. Next, let's look into the due diligence audits process before ending our trip in France. The due diligence audits process includes a framework which can be further divided into 9 different areas which are: 1. Compatibility audit. 2. Financial audit. 3. Macro environment audit. 4. Legal, environmental audit. 5. Marketing audit. 6. Production audit. 7. Management audit. 8. Information systems audit. 9. Reconciliation audit. Konnichiwa. Welcome to Japan. Let me guide you to forensic audit. Forensic audit often conducted to obtain information as legal evidence and requires critical analyses, investigative skills, accounting knowledge, business experience. Report to the company that has appointed him/her in the case of regulatory body to the committee set up for that purpose and trained personnel in detecting, investigating and deterring fraud and white-collar crime. Forensic audit can be defined as an in-depth investigation into any irregularities of a business, such as fraud, shareholder and partnership dispute, investigation under statutes, allegation. Stages of forensic auditing. According to Association of Chartered Certified Accountants, the process of forensic investigation is almost similar to the process of conducting an audit but with some additional considerations. The first stage is accepting the investigation. It is important to consider whether the firm has the necessary skills and experience to accept the investigation. Additional consideration also needed if the investigation is being requested by an audit client. Second stage is planning the investigation. This stage required careful planning of work in order to achieve the objectives of the investigation. Considering the best way to gather evidence is also required. The third stage is gathering evidence. The investigator needs to understand the specific type of fraud that has been carried out and committed and should gather sufficient evidence to be used as proof in a court case. Various techniques can be used to gather evidence, such as applying computer-assisted audited techniques, CAATs, discussions and interviews with employees and using analytical procedures. The fourth stage is reporting. The report usually contain the findings of the investigation, like summary of evidence and conclusion, discussion on how the fraudster set up the fraud scheme, discussion of controls, if any, and recommendation for improvements. The last stage, the fifth stage, is court proceedings. Members of the investigation team may be involved in any resultant court case to describe the evidence they have gathered. It is vital that the members of the investigative team can present their evidence clearly and professionally. Ladies and gentlemen, it looks like that will be a slight change of plan. We cannot continue our world trip as it seems like we have been stuck in a time hole. Hello everyone. Today is 1st January 1990 and welcome to the world of games, non-assurance services. Before we start our first game, this is a bit of explanation of non-assurance service. Non-assurance services' primary purpose is to help clients' management by giving them recommendations or other services. Audit firm provided their audit clients with a variety of non-assurance services are consistent with the skills and expertise This is an efficient and effective way for companies to take advantage of the knowledge that their external advisors have of the business and operation. Okay, let's start with our first game. We are going to play as Tetris, consultation and secretarial service. One of non-assurance service by audit firms is consultation. Audit firm can provide management consultation to the clients either verbally or in writing. Areas that they can give consultation includes acquisition of a company, venture into new business, development of new product, and developing the internal control procedures for the clients. The next non-assurance service is by providing secretarial services to clients. Usually, secretarial service is done by company secretary. However, audit firms are allowed to provide these services by helping the clients with incorporation of new company, maintenance of statutory books and registers, filling statutory forms and return to CCM and other regulatory authorities. Turned out we are not really good with Tetris. How about we try the next game, which called Street Fighter? This is a fight between agreed upon procedures and compiled financial information. For agreed upon procedures, it is an engagement that may involve the auditor in performing certain procedures concerning individual items of financial data, financial statement, or even a complete set of financial statements. This is the procedures of agreed upon procedures. The first step is inquiry and analysis. Next is recomputation, comparison, other clerical accuracy. Then, observation, inspection and obtaining confirmation, and lastly, depends on what has been agreed with client. Seems like compile financial information want to counter back. The objective of compile financial information is to collect, classify and summarize financial information, produce a report, and no assurance is expressed. This is the procedures of financial information. The first step is obtain general knowledge of business. The second step is to obtain knowledge about accounting policies and practices. Next, understand the entity's business transaction. Then, the accountant should obtain acknowledgement from management, and lastly, the accounting basis on which financial statements are to be presented. Now, I am sure you are ready to play your favorite snake games. But before that, let us look at the review of financial information. According to International Standard on Review Engagements, ISRE 2400, review of interim financial information performed by the auditor of the entity applies when the review is performed by the entity's auditor and the interim financial information is prepared in accordance with an applicable financial reporting framework. The review comprises inquiry and analytical procedures which are designed to review reliability of an assertion, which is the responsibility of one party, for the use by another party. Review of financial statement will involve the application of audit skills and techniques and the gathering evidence. But it does not involve an assessment of accounting and internal control systems, tests of records and other procedures in auditing, such as to obtain third-party confirmation and physical observation. The ISRE requires the auditor to comply with the ethical requirements relevant to an audit of annual financial statements, implementation of quality control procedures that is applicable. Plan and perform the review with an attitude of professional skepticism, obtain engagement letter, agree on the terms of the engagement with the client, have an understanding of the entity and its environment including its internal controls, agree interim financial information with underlying accounting records, inquire whether management has changed its assessment of the entity's ability to continue as a going concern, read other information included in annual report, obtain written representation from management, issue a written report in accordance with the ISRE. If the auditor concludes that an unqualified review report cannot be issued, make appropriate modifications to the review opinion and maintain adequate documentation. The review report should contain a clear written expression of negative assurance. The auditor should review and assess the conclusions drawn from the evidence obtained as the basis for the expression of negative assurance. Now, let's battle in the game, Sonic the Hedgehog. Review engagement is known as negative assurance, which means that an auditor provides a limited assurance that the financial statements adapt to generally accepted accounting principles, GAAP. Review engagement is meant to ensure whether the financial statements can be trusted. As an example, professional accountant is only providing assurance that nothing has come to their attention that will indicate the financial information is not presented in accordance with accounting standards. However, even though the type of audit procedures for a review is less than the audit, the planning procedures that goes into the review is the same with the planning in audit. Now, let's play a round of Pac-Man before moving on to the next game. In this round, we will be looking into examination of prospective financial information. Prospective financial information can be defined as financial information which are based on assumptions about events that may occur in the future and actions which will be possibly made by the entity. For example, the predictions made by the management regarding the statement of profit or loss and statement of financial position in the coming year. The prospective is highly subjective and can also be in the form of either a forecast, projection, or both combined. An example is 1 year of forecast and 4 years projection. Financial forecast can be defined as prospective financial information which is prepared responsibly according to the party's knowledge and believed to an entity's expected financial position, according to the result of operation and also the cash flow. Financial forecast is also based on the best assumptions as to future events which is expected to take place by the management. An example, forecast of the sales of next year will be room 2 million, and in order to achieve the forecasted sales, a new product should be launched by the company. However, financial projections can be defined as prospective financial information which is prepared to the best of responsible of the party's knowledge and belief. Provided with one or more assumptions, hypothetically, an entity's expected financial position, result of operation and the cash flow. Therefore, the differences between financial forecast and FINA/NCIAL projection is that forecast is based on conditions which are expected to exist and also based on the actions that will be taken. On the other hand, projection involves one or more theoretical, hypothetical courses of actions. The responsibility of preparing and presenting the financial forecast and projection, including assumptions used, is on the management. There are two purposes of THE prospective financial statements, which are 1. For general use, to include in a prospectus which is related to initial public offering, IPO. 2. For limited use, as an internal management tool. Examples are that it is used to assist in the evaluation of possible capital investments or to be used in negotiating for bank loan facilities. Taxation. Taxation. These are the forms that require to be sent to Inland Revenue Board of Malaysia on behalf of the client. Form CP 204, Company Tax Estimation. Form C, Return Form of Company in the Tax Computation. Form R, Statement of Revised 108 Balance. Form E, Return of an Employer, and Form A, a Remuneration Statement for Private Employees. The client also needs to prepare the tax planning. Auditors should give advice on new changes and new incentives.